What's up, y'all? Let's go. Rocketeers. Oh, I like that. All right. Market's looking nice today. Clean. Rational. Looking pretty good. So hang tight. We'll get started in just a moment. I convert the TD bands right now. Then run the bot one more time. So just as a little icebreaker, as SPY and ES futures move around compared to each other a little bit, whenever you convert those, they'll be slightly different. So if the ES is a static number, the SPY should move around a little bit. So if you see that the SPY is different in the morning and the night, that's because the SPY is stretched a little bit from the ES. Cool little fun fact. And also, since hedge pressures and monthly hedge pressures and such are calculated in SPY, if you're converting to ES, those will also move around as well on ES. So you'll be static on one and mobile on the other. See 409.34, nice and rational, smack down in the middle. I like it. Close to the bottom, but we're still good. And then 415.21. What's up, team? Oh yeah, let's go, let's go. Okay, D bands forward, SPY, QQQ, spin up. All right, so we have 309.13. So nice and rational. Pretty good. All right, a little icebreaker here. 303.83. If you remember liquidity pockets. Let's see if anybody remembers from yesterday's training. Just a small amount, right? Of stuff, like to revisit some things just to keep you fresh. Remember I said you wake up and do something new. You need a new routine, right? I said if you don't make your bed in the mornings, get up 5 minutes earlier and commit to making your bed in the mornings. You're trying to train to be a trader, trying to train to do something, trying to do a new routine. Doesn't matter what you do. Trying to get better at something. I promise if you wake up and make your bed every morning, it's a start of a new routine. Start with the new routine that's easy. Don't start with the new routine that's hard. Did you make your bed? Or every time you go grocery shopping, commit to returning the shopping cart. Start a new routine. Do something new, something different every day. What's up, Torch? Good morning. I'll post a picture. I did. I made my bed. I don't normally make it. I used to. I'm going to do it now. I'm going to join you guys. So, as an icebreaker, if y'all remember yesterday, what happens in a liquidity pocket when bulls are upside down and bears are upside down? Give me the word that we use for liquidity pocket. Let's see if you remember. There's a word we used to go with it. Ray coming in hot with the def. Liquidity pockets. Buyers and sellers find each other and direction can be random. Your perfect equilibrium. Correct. Or according to the market makers. The most calculated highest liquid spot based on the risk, right? Random. Don't diddle in the middle. There you go. It's random. And once you hit the middle, it's perceivably random. You can see that once you hit the middle, it tried to break bull and then snap back down. Once you find that balance, it's balance. And the mechanism that actually leaves random is pretty cool. Market's opening in 13 minutes of this little chit chat is people covering positions, getting out. So when you're upside down and someone else is upside down, you're more likely to do something, which is either add to it or get out. Most likely get out. If the market is running and running and running, and you've been long for a year, you're less likely to do anything. So entering the position or adding to the position is less likelihood in liquid market. More likely, liquid markets, people that are upside down are more likely to exit. When you're upside down, you're more likely to close your position than you are when you're upside down to add to it. Not upside down. So if you're winning, you don't usually add to it as often as when you're losing. You freak out and close out. So the mechanism that kicks you out of that random middle is typically people getting out of the trade. So if you use that logic right from the middle, a couple of shorts squeeze and a couple of longs said, oh, thank God, I'm getting out. Right? And that's what you saw. Shorts got out and then longs got out. And you can usually tell a short squeeze by the shape of it. Short squeeze usually shape this way. Right? Like they usually pop. It's like a J shape. It accelerates and then pops. Whereas an event typically moves fast and then slows down. So self-catalyzing. And then the other way around, self-catalyzing. It's slower and then it speeds up and squeezes people. So this shape is long selling. This shape is short covering. Little icebreakers there. Get you started today. Good morning. What's up, everybody? Good morning. All right. Smash that like button, everybody. Let's get ready to go. Nice and clean day today, right? Rational in the middle across the board. Let's review yesterday's session. Today we're going to cover liquidity pockets, a couple other things, but essentially y'all know what's about to happen. Pull up my grid here, my 4x4 pre-market check. Okay, you ready to see this? We need to do our triple B really quick on VIX, but let's double check, right? Here's that mobile band. We'll cover this today's lesson, but you know from yesterday. So people hung around and begged to know how to do this one. You have 3 on the top right, top left, bottom right. These are the checks pre-market. Let me delete all this stuff. Doesn't apply. Here you go. Ready? Rational, 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 check, rational, check. We're good. 2 of the 5 rules. As quick as that. It's a clean day. I'm excited to see it. Let's just pull up some of my yellows, reds. Oops. Sure, don't have anything worth noting here. Okay. Interaction point today, what we call our unusual case. This is something that maybe we can talk about today a little bit, but let me grab this line here. One of our exploits, one of our 5 things you'll see is called triple B. Little guy here, we're going to map out the midpoint between these 2 contracts right now on this very moment in time. Put this here, boom and boom. Let's double check that's on the edge. When I do this, I usually update. It's inside, there's the Discord. Well, come on. Oh. There's a channel that I will put this picture in. It'll always be there for the month. Do this one once a month. You do it on the 3rd Tuesday of the month. It's as simple as that. We got 9 minutes till market opens. 15-day streak. Still not. It sat out the last 2 days. Technical difficulties on Monday, but yesterday perfectly sat out. Market went all over the place, and I knew better. And I sat out, and that's the whole point. You're going to witness every day, hopefully. Let's knock on wood that I don't screw it all up today. DD stood for Doomsday back in the day. It was a kind of a cute little name someone came up with because when we were consolidating, On the daily chart, it's creating one of those bull pennants where higher lows, lower highs kind of thing. And that number went from 0.5, 0.7, 0.8, 0.9, and then 0.4, then 0.2, and then the consolidation broke to the downside. And the joke was somebody said, hey, it's like a doomsday clock. But I mean, it really makes sense that the market, we talked about it yesterday, why it works like that, and it's in the video, so go watch it. Obviously, the S&P in a rational market is going to follow the stocks. If the stocks are mostly inside of their bear zone, then the S&P will snap into it, more likely than the stocks will rally to it. So that's what actually happened that day, and then somebody called it doomsday for fun, and then we kept it. Keep in mind, QQQ and other index, S&P, will have a gap fill, which is what we're approaching right now. I believe, did we already touch that? If we already touched it. Oh, I think we did. Never mind. Making sure I'm just marking up my profit targets in some places. Should I have them? We run a monthly map today as well. Actually, no, sorry. Monthly expiration is on Friday, so no monthly map. We usually wait till after the expiration Friday to run the monthly map for the next month. So this close to Friday, it's pretty much all. You have kind of like this iron wall for Friday to not see beyond Friday. When you're doing any monthly expirations type stuff, you want to run your monthly maps up to that. You'll get to that when we release some of the platforms. Excited to see that. Debbie, please explain what you're doing. Just watch today. I am pre-prepping for the market, and in the morning I do this pre-market check. This is a quickie. This is the thing that everything we do, we teach. I won't teach you a single thing today in the stream, but in the Zoom calls, come and learn. Afterwards, we do because we're in the zone and locked in. So just for now, since we're pre-market, I'll run through quickie stuff. I don't try too hard to understand it. There's a lot all at once, but just very quickly. If we're inside these green bands for these three index products, Russell, NASDAQ, and S&P, all three of them are good. If they were outside the bands, I would be not trading today. If you went inside the bands and came back out and came back in, I'd be cautious. Okay, so everybody, remember yesterday we did green light, yellow light, red light. On the count of three, or actually right now, go. Are we green light, red light, or yellow light on the DD rule? Because we learned one of the 5 rational rules yesterday. Kononenko, you need to come to the classes if you're asking a question like that. Watch the videos, buddy. They are in the Discord. Are we rational or irrational today? And somebody help your teammate out. Remember, we're going to do a little team jogging here. We run together. Somebody tell your teammate who asked, are we irrational or rational today? We have the ability to detect 3 of the 5 in the morning pre-market. No catalyst. Clearly see that. We have inside DD bands. We're good. And then VIX is good, right? Green. Pretty much everybody said green. Red. No, you mean green, don't you? Good job. Okay, good. Rational. Y'all are all good at this. Love it. So rational means I'm ready until we get our 2 other calculations in the morning. We're going to run liquidity maps on SPY and VIX. And once we get that, we'll see if the market has any particular cautions coming through. Ideally, what I like to pre-prep is DD's been greater than half for the last couple of weeks, so that's good. And we're trading close to the bottom of the zone, which is great, which means there could be long ups there right out the door. And speaking of long ups, it's going to be hard for me to long if my platform isn't exactly front and center, is it? Let's put that guy right there. Okay. Be very careful today. If we start losing this band going out, my stop is always 1 strike below. It looks like pre-market resilience is showing negative, which is calculating. Let me double check this pre-market. Make sure that's right. I'm gonna ask him really quick if we're calculating pre-market. Clearly, I'm asking my dev right now if this actually is using the correct opens and closes right now. I think it always has been. It's just, I want to confirm that. It wouldn't calculate if there was no number. But I think they start running it right here at 9:15. Wow, you guys are all good. I say green, 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 green. Do you have a new triple B? Yes, we do. And let me actually post that up. Thanks for reminding me. All right, market's about to open, which is great. If resilience opens negative, I'm going to wait till those calculations to come through. And then after that, we'll see. Where did my triple B go? Oh, February. There we go. It is 1975. I'm going to post it in the proper channel in the Discord called Triple B. Easy as that. This is going to be good until March the 14th. $19.75. So that's an interaction point that's going to cause the market to have some turmoil if you touch it. So that's just something to note. Going to see this. Reading my dev notes here from today. Lots of new release stuff coming out. Okay, so he says that that is correct. I'm asking what time they actually start running that calculation. I'm gonna guess that it's 8:15 Eastern. Okay, we're getting ready to go, and so that resilience pre-market obviously gapping down. So let's get right up on it. New York time. Because he does it an hour earlier, so I'm going to do it. Yeah. So I'm going to ask him to start doing it at 4 a.m. Ooh, that resilience is looking tasty. I don't have liquidity map yet, but I'm just going to jump right in. Resilience is looking good. I'll get out if we lose this. This is just operating blind here real quick, so I'm going to see what I got. Okay, so nice and rational. Market's nice and good. We are trading about right here at 410, right here at the bottom. That's good. That's almost an L. Let's look at EVXY. I just got into making sure resilience stays positive. You look at my screen, 30 is looking mighty tasty. Candle data right here. Hope you're trading slightly low. This is all good for UVXY. I like what I see. I'm gonna go right in right at the beginning of the day. I'm gonna add more right at the bottom of the DD band. Okay, let's look at QQQ. Double check. Meme reversion long up. QQQ random right at liquidity pocket. If we break through the bull zone, I'd like to take it. Just keep in mind that is it. Random from the start right now. So I'm playing the random cards today. We are bear short up on the S&P. Let's pull the liquidity map and take a look at this. I was letting you remind you, bear short up is monthly hedge to hedge. Trading from here to here. That's a pretty nice little scalp on the S&P. So let's go heavy on this. I'm gonna trade right up to there and close it out. And then we are in a liquidity pocket right now on the S&P. I mean on the QQQ. So that is a potential random sign from here. There are no points anywhere else that are showing me any kind of alarm. Let me pull up the classic app and see if I can't find myself. DD is about 0.7 on the pre-market calc. We usually wait for DD to come through right when we get 90-something%. But we start at the higher market cap one, so things look pretty tight. This is day 15 of the stream. Everybody hit that like button while you can. Let's go. Let's go. Smash the like button while you're here. If you have not checked out our extended trial at Rocket Scooter, check this out really quick. We're canceling the free trial. If you're in the free trial, you're about to get kicked and asked to join the extended trial. So the free trial is about to be discontinued. So if you're in the middle of it, we'll give you a chance to do the extended trial if you'd like, because the free trial is discontinued. You'll just kind of sit there by yourself and it won't be fun. Extended trial, it's $35 a month for 3 months for our $199 a month package. We're doing a 6-week training program right now. We want everybody to come check it out. This will be one of the coolest things that we ever do, and it's all live. So in future, you'll be watching the videos that are just kind of static. Everything right now is live. You get to interact for 6 straight weeks. You can join the program now. Catch up now if you can. And just watch the videos as we're making them. We're teaming up with Ash Nolan, and we're going to make this really, really, really badass course series for you guys, covering everything from future stocks, options, you name it. This is the best course series we ever put together. It's the finalization of everything we built here at Rocket Scooter. How much is Rocket Scooter in general? $199 a month. Is the normal price. We run promotions from time to time, but $199 a month is the price that will cover everything and all the data feeds you get when we have options trading, stock trading, everything else. You'll have data feeds for everything, and that'll cover pretty much everything with the exception of futures data feeds. You'll have to get those from your broker, which is like $10 a month. $35 a month for 3 months. You cannot beat that. It will never be that low again. So once, it was a one-time thing. We're never doing this again. So let everybody have a chance. So let me tell you, we've had 500 people sign up in the last week. It is insane how my days and nights are committed to answering all y'all's questions. We appreciate you joining and checking it out. If you were here for some of the extended trial stuff, have you liked it? Have you enjoyed it? Are you enjoying the first 2 days of the trial so far? Did you learn something? If you did, don't spoil it, right? But tell people here that haven't tried it out that you may like it, if you like it. What up? A stocks is 41.11 is the bottom. Risk going for yes. Will that rational? Keep your eyes on it. Yes, yes. A stocks is the man. Let's go. We are kind of up. I am looking for the bear short up, hedge to hedge. Let me look for some kind of let's look pretty bull setups right now. Anything that's moving off hedge pressure at the bottom. Cost Goog. Oh, let's put Goog front and center. Let's take a look at this one. So I'm going to run the scanner and on the scanner, what I can do is I can actually map out. Ooh, let's put the half gap here. I can map out what certain stocks are doing. This is a great setup with positive. As long as resilience stays positive, we're at the bottom, and I'm gonna trade up to here to the top of the bear zone. This is a great setup. Literally, a great setup. I like what I see. If I break monthly hedge pressure, then okay, I'm out. Market's going to collapse. But you have to remember, on monthly expiration, this is just luck of the draw. If I lose the streak, I lose the streak. If this happens, it happens. Monthly hedge pressure tends to collapse on the price in the last week, last couple days before the third Friday of the month. When you collapse on the price like this, it's very, very, very sensitive to this. So if you are breaking 410.5 by one strike, the market will collapse today, and I'm just dead, and I'm out. So we'll see if I do it. Right now, trade is up. Remember, everybody, smash the like button while you can. But if you have not done the extended trial, literally, we encourage everyone to check it out. It is massive, massive event. It's a daily thing. So we'll chat in a little bit. Everybody prepping for their trading day. Remember, we're at that random spot with NASDAQ. Everything's nice and clean. Resilience is right on the edge. It's the only thing keeping me scared. NASDAQ resilience is positive while rational at this time. I'm looking for things to push. Looks like we're right on the edge again. So with DD, with resilience positive, I'm looking for us to break forward. If somebody were to tell me which way we're going, DD is 0.71. Bull side is favored over bear side. Remember, when rational, 96% in the back test. We open on bull side, stay on bull side, open on bear side, stay on bear side. So that's the one thing that has me concerned, is that we've opened here on bear side, and breaking through here is a 4% chance, and that's it. Literally a 4% chance on rational days. It is rational and broke it through random. And positive DD means that the S&P or the Nasdaq will track the stocks. If the stocks are bullish, then the index will stay bullish, and that's what's going on. The problem is there's a 4% chance it does this. So it's hard to trust it. And as long as the S&P resilience stays positive and Nasdaq stays positive, I feel pretty okay about this. As a matter of fact, the trade goes to the upper DD band for the bottom one. Okay, cool. So we'll see if that works. This is day 15 of the 100K marathon. If you stick around, I'll hit the 100K in about 2 months. On average, give or take. It depends on how many irrational days we have and how many sit out. But as long as they stay positive, with resilience positive, this is good. This is what I'm expecting. I'm pretty excited about this. It might be, so I have to be very careful here. Hold on one second. I gotta bring up my my task manager here. Hold on. All right, we're back. Exit in the task. Okay. Rebooting my pencil tool here. This is a perfect day to run in that upper close band for the gap to fill. That resilience is negative though, so I'm gonna be very careful. I don't like what I see. That's an alarming thing. When rational, it can be a leading indicator. So I'm deciding as I'm typing, this is happening. Not good, not good. Come on, I'm gonna give it 2 more seconds. I'm gonna bail. Might be a losing day. Not good, not good. Okay, I probably should have bailed. Okay, this is probably gonna lose. Fine turned green, I'll close it. Don't like it. So this is gonna fall today. That's a luck of the draw, right? So that was decent, and then the stocks pull first. Remember, resilience is a leading indicator when rational. Breaking through monthly hedge pressure is irrational, and actually I didn't even notice that, but we are irrational from breaking through it to the upside. Oops, did not notice that. Okay. I did not notice that. Okay, I need to get out. Okay, I'm bailing. Not good. Res is greater than less than 0. I'm out. Yep, I'm out. Don't like it. Luck of the draw. Also irrational here as well. So actually, to be honest, I don't know. I probably could have held on to that with something small. Yeah, I'll probably just get out of this one. Remember, we do have a hedge pressure break on this side, so yeah, way to manage a trade. Yeah, just get out while I can. It's probably going to trade lower. I don't like it, this irrational signal, and that QQQ random is probably what it is. Yeah, let's just see what we got. Now remember, we are technically on hedge pressure break territory, so it's just not really a good sign. I bailed at 24.75. Let's call it a morning. At least I didn't take a loss. So that's how it works, right? You come in here and you get the signs that don't look good, you bail. Res is negative. It's telling me that we're probably going to pull back lower. Now remember, irrational though means it can lag the market. So even though it looks like it's going, and maybe that was a terrible bail, but it's not a loss, and that's my whole point. And now it's back to positive. So I'm gonna be very careful today. I don't know if I like what I see. But in anywho, right? This being hedge pressure break territory, irrational right here, irrational above. That's one of the rules you'll learn. And so when we're rational here and this is below zero, I just went ahead and bailed. Not going to tussle with the monthly hedge break and play with that today. Small loss, better safe than sorry. And this close to monthlies is just kind of one of those things. But at least a loss. And bear markets, pretty common. So that's the one thing you'll note. In like a bull market, you'll wake up and it's just like good, like one day out of a month irrational. Bear markets like every other day, almost sometimes every day. You have to be careful, and that's when trading markets, when the pros and the non-pros tend to appear, right? Remember at the beginning of 2020, how many trading gurus there were in trade rooms you had to choose from? Everybody on Twitter was selling a trading service. 2023, most of them are gone now, but guess who's here before and after that? Me and a few others, right? There's a reason for that. You can't trade a bear bull market like you're picking directional stocks every day in a bear market like you in a bull market. Dude, it was horrible. In like 2020, everybody had a trading service. Like everybody. People lost their jobs and like, I can do this day trading thing. Ooh, I can make money teaching day trading courses. Hey, everybody. Take my awesome course on MACDs. Let's go. Like, literally just regurgitating textbook trading stuff. And the problem is the difference between the pro and the non-pro is how you trade different markets. I'm very skittish, and we're in a bear market right now. The first time in the history of my parent, when's the last time we had QT? Probably my parents were kids. Well, last time we had QT Fed. Shit, QT's been forever. When did we have QT the last time? Can we remember? History. Everyone's a genius in 2020. Oh yeah. What's up, Ashton? What'd you miss? I bailed on the irrational signal. I mean, sorry, on the Resnex less than zero signal. I went to buy the dip, and then I just bailed with a tiny little win before things got nasty. We are looking a little. So resilience is going to not necessarily lead the market. The rationalization is gone because we are in a hedge pressure break. So we are completely irrational above on hedge pressure break. This could be a nice little short squeeze that runs to the top. If I do trade irrational, which I might want to, I'll trade something very small, which things do look kind of okay, which I might decide to trade small. The problem is we are in bull territory. We passed a random spot on NASDAQ as well, so I'm just sitting here trying to look at this. Remember, if you are unsure, small is the way to go. I need some better signals. This is a nice, juicy stretch, though, from one side to the other. We hit that lower DD band. Monthly hedge pressure breaks are pretty brutal, and when they happen the week of expiration, you don't want to deal. You do not want to deal. Well, Sam, so after the pandemic, fall in the market was only going up. Everyone was doing it because it was relatively easy. They have to actually go understand the market. They were all gone. When I didn't have great pubic hair, I know, Uncle Eric, like that was when you were such a young whippersnapper. Eric, I just finished explaining to Nicole about your lovely G-rated partaking in the BTFD video on how you were reading books to children in that video. Like a great productive member of society you are. If y'all ever saw that Cardinal Cash music video, have y'all ever seen that? Who has not seen the music video? We haven't talked about that thing in a year. I wonder what old Cardinal Cash up to these days. Yours truly was in a music video with a couple other folks in the trading community. Tradesman Matt was in it. Eric Beaumont was in it. So resilience is not necessarily leading the market. The rationalization is gone on the hedge pressure break. So trading would be trading small if I did stick with it. I did bail earlier on the wonky signal. And again, it could be lagging the market. It is this close to expiration. I don't really like it too much. But it does look pretty good. I would say if I were to take anything, it's going to be trading small, right? Hedge pressure break is trade small. Res stays positive. It typically means we go up to there, which is what I was trading for earlier. But I have to remember that we all pass through a random signal in the NASDAQ right now. And of course, this is NASDAQ bull side right in here. So this is going to be random right here on QQQ. We put them side by side. Let's pop out a second instance just to show this to you. We're going to watch them both at the same time. VIX is nice and clean, but I promise better safe than sorry. When I get these weird feelings off of these irrational modes, I'm going to kind of just take it easy, right? There's no reason to push too hard. I did bail before it turned into a worse situation. We passed through a liquidity pocket, which is random. Resilience is all over the place, right? We have interesting mechanics here, but also we did have a hedge pressure break on S&P. This is what caused things to destabilize. Even though it's a hedge pressure break to the upside, which is great and positive DD, if you were to make me make a decision, we are going to the top before the bottom, but it's still not good enough signal for me to take it. You'll see how this works? As years go by, you'll learn. The difference between your 2020 trading guru and me is when I don't like the hand, I bail. And you may say, well, you have like pocket sevens. And I say, I still don't like it. I don't like what I see. But that's a great hand. I don't know. I know if I like it. I'm going to bail. So let's run the scanner. If you haven't seen our scanner, if you play stocks or if you are swing trading, if you pull up any of the bull stuff, and let's add like greater than monthly hedge pressure as a rule, okay? So we're gonna look at all bull setups and all bull setups greater than monthly hedge. I'm gonna now rank by distance to monthly hedge. And let me in this parameter column remove some of the stuff that I don't really need to see. So we'll show you how to find some swing trade stuff. This is a pretty cool way to look at stuff and pull tickers. Now, this is the end of the day if I were to pick something right now. QQQ hit the resistance against all odds, irrational market. If I were in a tiny little trade, I would exit right now. That's it. That's the end of the day. Day is over. Window of opportunities close. Random, we pushed to the random middle. I bailed just because I didn't like it. Somehow got a little bit of luck. Resilience is coming down. This is the end of the upward movement. Today, we are not going to the top. Irrational break, if I were to make a call, it's now finally the end. I would probably bail long. If I was lucky enough to hang in there and hold, I would absolutely be out of the trade right now. Are you guys starting to get my trading style? Even after the first 2 days of the courses, are y'all starting to learn how I do this? QQQ, as I'm already kind of, I don't like it. And QQQ finally tapped the upper band. If I were in a trade, I'd be done. I'm out. Res is now back to 0, right? It's not doing so well. When it does this, stocks are all over the place. And the reason you're doing this is because we kind of open flat-ish on some things. You have some big mega cap stocks flipping up and down. And so the hedge pressure break causes this to detach as a leading indicator. I have no idea if it's leading or lagging, but that's the end of the day. Are y'all starting to get it? And y'all saw me getting something that looked great. I bailed. I didn't jump in. I didn't lose. Ask me a question. Let's go. The reason it's short hedge pressure on that BRSU because of 70 DD. You mean, oh, you mean against monthly? Karen? Yeah, I only short against monthly from the bottom when DD's less than half. Yeah. As you guys are asking, the only time I short usually is against DD. I'm against monthly hedge from the bottom. It's one of my rules. But I'll only do it when I get the support that the stocks themselves are not bullish, right? So let me draw the conflicting signals we had today. Let's go. And like I said, the trading day is over. And if you were to ask me right now, I were to bet we're likely going to trade lower before higher. And not the DD rule is likely not going to play because we're not rational, right? Up here, irrational. So we can't bet that we hit the upper band before the lower band. Do you remember yesterday's course? So let's go through all the steps. I trade other stocks and everything too, Dimitri, but for the challenge I'm doing, I committed to only trading the S&P and NASDAQ because it's more relatable to most people. Man, I'm good. Oh, ooh. Y'all like that? Okay. Now, this is what I'm saying. In 2020, yeah, and that's a great short for those of you that do like to short on that BRSU. I'm not really, I personally don't do it. It's not like it's a bad short. I just have really strict rules I have on shorting when doing the small account challenge. Maintaining drawdown is a big important thing for me. But those of you bajillionaire, millionaire traders that love to go in there and have some fun gambling, the BRSU was a perfect play with those weird, irrational signals, right? The short from here to here, as Karan said, he took a trade from there to there. Awesome job, man. Look at that stud. Look at that stud. So the caution, right, to understand the state of the market, this comes with experience. The more you practice, hopefully the more you'll get it. But are you all liking the classes? The stop loss is one strike below anything. Yeah. Any pivot that I have, I give it one strike stop. If I want to know what the strike is, I come here and just look. If I'm looking at 410, I just go to 410 and I can see that the options are 1 point apart. So it'd be 1 point on each side. Trading day's over. Right here. Trading day's over for me. Nothing else. Now, it's going to look kind of meh. And that's like, Matt, what are you going to do now? I don't like it. So let's draw the pieces. Okay, ready? Let's put them side by side. Let me clean up the chart. And I'll show you how to pick some stocks. Like I said, we're looking at things right above monthly hedge pressure. And we're looking at bull setups now. Now, I don't think the market's likely going to rally. But what I was trying to talk about earlier is if you wanted to pull some bull setups, look at your liquidity map. And you can put all the 4 bullish ones here. So you're trying to find bull breakout plays, right? If you're being a stock picker and you're being very picky, the 4 bull setups are BLU, BLD, BRLU, and BSU, right? 1, 2, 3, 4. The one with the green arrows to point out. Pick them all. It says choose. Choose your destiny. Pick those 4. Come right here, monthly hedge. I'm going to go and I'm going to look for just stocks that are above monthly hedge. You guys will learn in the classes that monthly hedge is your bull or bear sentiment. This is your structure. Above monthly hedge is bull structure. Below monthly hedge is bear structure. And what Ashton and everybody will tell you, losing monthly hedge is a problem this close to monthly expiration. Let's tell some of my friends here. Let everybody know. You know, I like to send out messages to my besties to let them know that monthly hedge pressure is something to watch. I have some folks that I'm training, and they're like, "Let me know when markets are irrational by your calculations." So as they're learning, I'm telling them, I say SPY MHP at 410. That's what I'm watching today. Just on some of my trainees here. Okay, so now if I'm gonna look for plays on the bull side, I can sort by close to hedge pressure, right? This is the distance on a percent basis. Make this a little bigger if y'all want to see it. And I picked all the bull setups above monthly hedge pressure, and I can actually have a lot of other things I can look at as well. Something that is above monthly because it broke through monthly is a breakout. So if I were to look for breakout plays that are right on the edge, like cost is right on the edge, this would be something I'd be watching that opened below and is breaking above. So if I'm looking for breakout longs, this would be it, right? How I would do it. Something that is currently above monthly hedge, just like right now, SPY is below monthly hedge. It has me a little nervous and cautious about the market. At the same time, if I was short and looking for something to break up, I would be looking for that particular setup as well. And I would do all my normal things, DD greater than 0.7, so bull side supports, you know, breaking through monthly hedge is an irrational trade. So if I'm looking for bull structure, that's how I would do it. And of course, you know, Lucid, that's a breakout play today. But be very careful, right? Because the S&P, if it starts turning negative and looking crazy, these stocks could have a bad day, right? As this monthly hedge resilience are taken with a grain of salt on irrational days, it is right at 0. It's not strong enough for me to want to buy anything, but this is just pretending that it was. But I would find stocks in this exact same way. If I'm trying to find stocks that look good, looks like Roblox, looks like all the pop stocks are hot today, right? So a nice little breakout play on Roblox right here. And that's what I'm looking for. Things that have broken through monthly and now have swing structure. This is swing setups, right? Now, remember, monthly hedge pressure is going to guide you into this Friday because it expires on Friday, the 17th. So one thing to note about monthly hedge pressure, and I'll give you guys some tips and tricks, is that monthly hedge, as the month goes on, if a stock stays like right here for an entire month, right, 1 month, I'm just drawing some random lines. Monthly hedge tends to be far away. If it's, say it's bullish, monthly hedge will be really far away. And as you get closer to expiration, as that hedging gets more and more neutralized and those positions get more and more anchored, you start to collapse closer to price. So really close to monthly Friday, you're going to notice that you're going to interact with monthly hedge pressure a lot. It's going to cause some expiration mechanics. We expire in 2 days, and today we have monthly VIX options expiring as well. So you have some weird volatile mechanics. A rule of thumb, if you're trading and you're new to trading, if you want some extra rules of thumb, the third Wednesday, the third Friday of every month, play small, no matter what. Now, this isn't my rule. This can be your rule if you want an extra rule of thumb. There's some timing mechanics that come through. As you'll see, why is the market irrational and choppy? It tends to be irrational in all markets more often than other days. So play small. Why is because the expiration mechanics of monthly VIX, which was this morning, rolling into a new VIX futures contract, which was last night. People positioning on the VIX right now. We had this huge, myself and a bunch of institutional advisors and managers were on a space yesterday talking about this very mechanic on how now the CBOE has issued options in the SPY and QQQ and I think SPX as well. Or SPX 0 days? No, or just till Friday? I mean, I'm sorry. Are they all days or just Friday? I can't remember. I think I have to look at that. But I know SPY and QQQ were in the letter. So SPX is typically just Fridays, I think. I don't trade it, so I don't know. Any SPX folks here? But SPY and QQQ Monday through Friday. And so you have this 0 day effect that's happening all the time. And somebody put up a stat that says that the notional value, like 70%, is held in these 0 day options in the S&P and SPX. And that so many funds are just over leveraging on 0 day gambles, which is crazy, right? To see that all this volume and activity is in that and purely a gamble. So what you see is that the VIX, the VIX looks like 30 days out, right? On the SPX, that the majority of risk is 1 day out that day. So the VIX is not accurately reflecting the real volatility of the market, right? You're getting these kind of VIX discrepancies, which is a weird new effect that a lot of people are complaining about. And a lot of these firms are participating. As a matter of fact, I got a message yesterday from a guy that runs a hedge fund. It was like, he heard me on the space. He goes, Matt, check this out. I go, okay, let me find it really quick. I kid you not. Y'all ready for this? Y'all want to see some, y'all want to see the next, like I said, I'm getting these mortgage-backed security icky vibes, right? This is so 2005. I can't even begin to tell you. SPX's daily expiration now as well. I think all the CBOEs went 2 weeks out. Look at all these people that are teaching classes on how to use daily expiring options to manage that volatility discrepancy. Well, the CBOE issued daily options because, boy, that's a big money maker, right? There are people saying that this is the next crisis that we're seeing brew before our very eyes. But hey, we got CBOE, we got Matt up here, Sean Cruz is somebody from TD Ameritrade, IMC Financial Markets, teaching a class on how to YOLO 0 day SPX option, how to throw your money into very inexpensive, risky lottery tickets. And as interesting as that is, everyone's getting in on it, right? This is have that nasty stench. The idea that the VIX looks 30 days out and all of the risk is thrown 1 day out or 0 days out is scary to me. The VIX does not accurately represent a smooth volatility. There's a volatility discrepancy. As a matter of fact, the person that sent me a message said, as an advisor, they're constantly making more phone calls about margin calls since December than they ever have before. As people are levering up on these 0 day options, and you're causing, and there's a discrepancy between the CME group and the CBOE, because the CME group is the one that sets margin requirements for these futures contracts. And if the VIX futures are tracking the VIX itself, which is 30 days out, the VIX futures can't accurately predict, and the volatility can accurately be reflected in futures. So now there's a discrepancy between futures and the equities market because of those 0 days. And the equities market is now dragging futures along when futures are supposed to predict the equities market. because all that money is popped up in these 0 days. And you're getting this discrepancy in that the CME can't update the margin requirements fast enough to actually reflect the actual volatility you see, because the VIX looks 30 days out and it's smoothed by all those clean waters like 3 weeks out where nobody's trading. It's a fucking weird situation we're in. And what people are saying is that there's going to be a situation where this can pile up and create another flash crash. This was the chatter yesterday between myself and one of my new colleagues who was talking to me about this. We had a space and it just naturally came up. People were talking about discrepancies. So why are they doing this, right? Why would the CBOE be issuing options Monday, Tuesday, Wednesday, Thursday, Friday expiration? Why is the CME doing? Why are all these groups doing anything? Well, they all make money in some way, shape, or form. You make all kinds of exchange fees by selling more products. You know, if you only had ice cream once a week, right? People buy ice cream once a week in the summer. But if you're smart enough to have ice cream every day, people will buy ice cream every day. You give people more granularity and invites them to have better control on risk, and they can make more trades. You have more options. People make more trades. You make more money. How about them apples? It's a crazy world we live in. So anyways, questions? But it's neat to see all the institutional folks are hedging against that volatility discrepancy with these 0 days, right? It's literally a pure vanishing act. It's like temp car insurance. Like, you can buy car insurance a day at a time. Hey, you need insurance today? We got it. Lever up. You don't need a lot of money to protect your entire hedge fund. But the caveat is, if today is a day where you project a lot of volatility or a lot of risk to your portfolio, buy some really cheap insurance and you can cover your entire position. But we'll let you know, if your insurance doesn't pay out today, you lose your entire policy today. You gotta buy another one tomorrow. So it's like people aren't hedging a month out anymore. People are starting to hedge very closely now and keep risk on the table. And if they need to, they got 0 days to jump in, right? So the question is this causing the market to be unusually volatile as the VIX is looking 30 days out and hedge funds and money managing firms are looking like 1 day out? You tell me, right? And that's a cool conversation to have, because boy, oh boy, wouldn't it be weird to sit there and listen to the first chatter in like 2004, 2005 of the pending doom of the mortgage crisis, like years before it happened. Are we creating a situation that we can wind up another flash crash? It's a neat conversation topic that if we're not careful, people are stupid with their money. It's very possible. That's what's brewing. And so that's why I like these spaces. You're avoiding kind of like the talking heads on the news, and you're actually listening to people that have their ear to the ground, and really smart people out there talking about really neat things before it's headlines. This won't be headlines for years. Market sustains another flash crash. Why? Well, some firm was right on the edge. The guy that managed all the decisions went on vacation. He came back in the middle of the night. There's a crisis. Everybody says, and he goes, fuck it, throw it in 0 days. The people that are on the other side of that trade don't have enough capital to hedge it. They get squeezed on margin calls. They can't get a cash infusion because people are going to infuse the cash, got squeezed on margin calls, and then all of a sudden, market collapses for a day or two. When it's just trucking along, nice and steady, nice and stable, or somebody induces it by some clever form of manipulation, forcing somebody to rapidly buy 0 days, which rapidly forces people to throw money. Problem with SPX is that you're settling in cash, right? You gotta come up with cash to beat that call. And if you can't, you may not have something to acquire, right? You're in SPY shares, you go out there and get SPY calls, you can go out there and get SPY shares from the market. Sometimes it's easier to liquidate one thing to buy another. Sell a lot of your Apple and Google and get some SPY and exercise the options. A lot of times it's hard to free up cash. especially if your cash is leveraged cash and it's vaporizing and you may not have enough money to go out there and exercise the cash value of that. And then all of a sudden, game over. Nice fun talks. Love that. Okay. Extended trial. Anybody here not taking our trial? We're going to do our class in 2 hours. I want you all to come. Okay. Kind of a mad day today. So that's kind of cool to see that was pretty predictable to not chase that long. It would have been exciting had we not had that hedge break, but let me draw all the things that we're dealing with today. So you can see just in general, while we put them side by side, this is just the final kind of analysis point. So let me put this right here. When rational. Okay, these are some things, right? When rational. Which we're not, right? Breaking through hedge pressure is irrational. So right here, immediately irrational. This is one of the rules. You may not know it yet. So we can't make these judgment calls, but down here, rational, okay? Believe it or not, below it is rational, this kind. We open below, rational here. So when rational, we'll talk about it. Res greater than 0, resilience leads the market. I expect us to go from there to there. Res less than 0. From here to here. So when irrational, we remove everything. We don't use it, right? So down in here, we use everything. Right? That's the best part. So, oops. So when rational, which is here, we use everything. Everything comes back on. Resilience is less than 0. So this is going to be resistance. Right now, we're rationalizing half gap as resistance. When rational, we are rational here. Resilience is less than 0. This is resistance or that is resistance. It's exactly how that worked today. Okay. This is mode 1 in the bands. Mode 2 out of the bands. You'll learn this later. But right now, this... And when we pop above, it's irrational and you turn up. I know it seems like a weird way to see it, But above monthly hedge pressure right here, I can't make any determinations with resilience. So in the irrational territory, resilience, you don't know. So I'm going to do rational like this, irrational, no resilience. So irrational, no resilience. So the neat thing about it is it's going to be a great guide on the downside. It's going to be kind of hard to use on the upside today. And that's just the nature of today's beast. And when you get weird signals like that, it could rally for the rest of the day. It doesn't mean that I'm going to bet it. And right now I'm not sure what's going to happen. So back to when rational, which is where we aren't. If we're down inside of here, if rational, this states we touch the upper band before the lower band, if you remember from yesterday. So when rational, we're not going to touch that lower band before the upper band. So it's not going to go there. Isn't that cool? Y'all saw that from yesterday. Remember the DD class? When rational, it touches the upper before the lower. So there's a magic, fluffy, invisible pillow there keeping us from touching that lower band, isn't there? The classes are going to be in our Discord every day. We're refilming all of them and going through this massive journey together as a team. So join us, and yeah, and you can watch it. Like I said, $35 a month for the $199 package. It's never going to be like that again. Everyone else is going to be market price forever. We had 500 people sign up this week on that, and keep going. More and more and more of you want to join. We're going to cut that extended trial off at a certain point, probably at 1,000. And like I say, it's $35 a month for 3 months. We might give you a coupon if you stay the whole time for something much less than $199 at the end of it. Can't beat it. And you'll learn everything. Videos are in Discord. Videos are going to be recorded and posted. But it has a flow. Are going to go from A to B. Isn't that funny? We're stuck in rational jail. So do y'all see how, does everyone understand this part? Let's talk about the part you remember from yesterday. Do y'all see this part? If it's rational down here, right? It's going to go to the upper before the lower band. So it's trying to not go to the lower band. Do y'all see that? All of our rules are so good when you're rational, right? They make a lot of sense. So to remind you, this is a really cool effect. Rational jail is a way to put it. Your window of opportunity is inside of here, right? DD greater than 0, greater than half, sorry. It's keeping us off that yellow line. It's not touching it. Irrational here, which means res, DD, liquidity map, off. So up here, you're gambling with the small positioner sitting out if you're me. Down here, you're knowing it's just not going to want to touch that lower band. Crazy, right? Is there still a lifetime option? Yes, there is. 10% off front side of the front page of the web page. So those of you in the class yesterday, does this part make sense? Just say no. If it doesn't, I can explain it. So, right, we're irrational at this point. Anywhere above here is irrational, right? Which is why I did take a heavy position, but I bailed. I didn't like being in a heavy position. Now, again, rules are competing, right? If you're to take a bet when irrational, right, the DD being greater than half talks about things wanting to be bullish rather than bearish, the 4% chance. When rational, when irrational again, when irrational, we don't rationalize. Who knows, right? Who knows? So clearly in this sense, irrational, we don't know what the percentage is of being in the bull side. So we're in, well, I liked how some Shmed said rational jail. Isn't that cool, right? But I did bail on my big position just because it requires me to be irrational to get it. And I know that it's likely going to have some volatility, but I didn't also short it for a long period of time because, again, DD rational kicks back on here and they stay on. That's it. So I'm able to use it in here, as in buying the dip back to here and buying the dip back to there would have worked. But again, I would have only bought the dip had we got right on the edge, but only back to there. And also when rational, the percentages on hedge pressure breaks was 89% on SPY and 11% break when rational. Again, when irrational, who knows, right? Back test numbers. So when rational, 11% of the time, the SPY broke. 89% of the time, it didn't. So at the point in time you open, 11% chance, or 11% of the time it did that. Small probability. And you see how stocks are all over the place? These are mechanics that do take place on the third Wednesday of the month. Why is it choppy and all over the place and hard to predict? This is the third Wednesday of the month. They're always like this. You have volatility just becoming a thing. VIX monthly options expired, and people are now starting to roll into new VIX monthly options. I like rational jail. Let's make that the topic today. That's a good segue from yesterday's class, right? While like you didn't see people jumping in and chasing puts, saying it's going to crash today. It's weird that the crash or the below monthly hedge pressure part is the rational, right? Above it is irrational. So down here, as it's becoming, more pressure to the downside, the indicators kick back on and tell me that DD is going to want to float that bottom band and not touch this before the upper band. Remember, that was like high 90s percentile when we talked. We showed you the examples yesterday, right? I picked a random length of time and we counted all the cases of this rule and there wasn't a single violation. And I said, it's one of those things that when all things line up, that rational DD ratio rule is high 90s%, right? And this is an example of that. It's so good, in fact, that it's just, they're so strong to not hit that bottom. It doesn't even want to touch that band, right? And that's pretty neat. Like as it's trying to crash, there just seems to be like this magic buffer that's keeping it from doing that. It would be very, 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 very rare, like 1 out of 100 chance to touch this lower band before it touches the upper. Isn't that crazy, right? That's the rule. That's the class from yesterday. And it's cool that we just segued into seeing one of the cool effects of that, and even QQQ as well, right? Isn't that neat? And that's what we teach. Doesn't mean I'm gonna bet the farm there, but it does mean there just seems to be some kind of right. Oops. And we're going to cover this today. So everybody get in the trial. If you haven't done the trial, get into it. If you're in the free trial, I'm going to break your heart because sometime today you will walk into the Discord and your access will be gone and you will turn on your platform and your platform will be gone. Everyone in the free trial is getting kicked today. We're no longer supporting the free trial. We're getting a lot of questions on day 2 and day 3 of the free trial. And they're saying, what do I do? What do I do? It's like we decided as a company that 7 days is just not enough to train somebody. I think free trial is a trick a lot of those companies out there use to just get you in the door so the sales team can take over. Check it out. Free trial, free for 3 days, or $1 for 3 days. It's all just to get your email so they can pitch to you. And to me, that's not really ethical and fun. We put a free trial in there because somebody said, y'all are new. Let me try before I buy. And I was like, okay, free trial. And we didn't even take a credit card because I thought it'd be unethical. Take a credit card for a free trial when everyone else does. I said, no, I don't want people to like join and forget about it and then get charged at the end of 7 days. Don't take a credit card. We spent weeks programming our site to not take a credit card and create ways that y'all can't exploit the free trial indefinitely. So that's how we did it. Well, you, Ezra, should follow the instructions on your dashboard, which when you first go to the Rocket Scooter dashboard, it sends you through a walkthrough, which I know you skipped, and a lot of people do. But the Discord will give you the instructions on how to get in I mean, the dashboard will give you instructions on how to get into the Discord. I know when I open a box, I usually like open the box of my new tablet and throw all the instruction books to the side of the room and start playing with it. Some of y'all did that, but there's a cool walkthrough on the dashboard that gives you all the instructions on how to get into the Discord. Oh, I know, bro. A lot of people did that, and I was like, it's okay. And so what you do is just send me a message and I'll hook you up. We're writing a bot sometime this year to automatically adjust roles, but we haven't made it yet, so we still have to manually do it. Not going short. Neither am I, man. I throw them out and I just like figure it out myself. That's how I've always been. Okay. This is a cool, okay, so this is a cool thing, right? You want to touch upper band before lower. However, once you pass through this barrier, it's irrational. So if we call this like rule A, because irrational, rule A no longer applies. So this is wanting to go up here. This is saying this rule no longer applies. So down here, it's going to want to float. Up here, no clue. Isn't that funny? So that's when we talk about like advanced rocket scooter principles. This is an advanced principle. It's not, okay, upper band for lower, YOLO to the top, which is the trade I was thinking about, but when I absorbed and put more thought into this, and I realized, oh, it's irrational. Well, let me bail. Let me assume resilience is not leading anymore, and I can't use my DD roll. Pretty cool, right? Justin, been here for a couple of days. Thanks for knowledge. Well, thank you for being here for a couple of days. Our passion project of making this platform is the best thing in the world to me. I was talking to Nicole last night, actually. She was just saying, like, you know, reading what you guys are saying in Discord. She's in the Discord. Helps out a little bit as well. And so, actually, she helps out a lot. But she was saying, like, you know, you're the only person I really met who just takes like extreme passion about what you do. You know, it's like to the degree that you're motivated by nothing other than the art that you're doing. You could care less if you made a dime from it. You could care less if people respected or liked you, or even, you know, some people out there do it because they want to be worshipped by their audience. They want to be regaled. It's something like Matt, you literally have zero fucks what people think. You do it because you love doing it. Like all these, you know, all these quick ways to make a buck. Like, yeah, it's one day, like 7 days for $3. When you get your credit card on file, then you forget about it and you get charged. You know, I've been paying fucking Malibu tan for like 3 years. And I haven't got a spray tan, or I haven't been there in like 2 years, because once you start paying, you forget to cancel. And that's what a lot of businesses do. And I thought that would have been silly. Am I making a whole lot less money? Absolutely. But I think that's not how I wanted to be. I don't want to trick people into buying something because they forget about it. So we took the credit card away, and the free trial is great, but people get in 7 days and they get kicked out and they're like, wait, what just happened? I didn't get a chance to learn anything. And so we decided as a company that you can't learn anything in 7 days. You'll have some fun. You'll not understand all the fullness of the tools, and you'll leave with like, I don't know, maybe it's good, maybe it's not, I don't know. And we said we want people to commit. So we created this extended trial thing. And we're making the platform free. Even on top of that, platform will be free. And $35 is enough money to cover your live data costs. So essentially, it's 3 months, quote unquote, free trial. Free-ish. We pay your data costs, the server costs on your behalf, and $35 for the full platform. And so it's like that. Like, we take a payment, it's not going to be like 50, 30% off. It's literally like 80-something% off. Just covers your data for 3 months. And we want to train people because we don't have to retrain you. You'll see the light and you'll understand it better. And that's why we did it. How do you calculate the SPY DD bands? Amaranth. Oh, hey, buddy. Okay, so nice to meet you, by the way, finally. We chatted yesterday, and I'll tell you, there are 2 videos in the Discord. There are videos from the new sessions. Every day we're recording new videos and new sessions, okay? And I want you to go right here to Zoom calls. and you watch them. So since you just joined yesterday, lucky you, you only have 2 days to catch up on. So everybody, the 6-week training course is being refilmed. Now the videos are long because these are the raw recordings, but we're going to edit them and have the long video available for those that want the entire example or the entire experience, right? It's not just training on trading and trading mechanics and risk management. It's also training on life. It's a lot of coaching in here, just personal coaching. A lot of being a better trader is being a better human, being a better problem solver. So we go through things that help you create routines, break habits. There's all kind of team building exercises we're going to do. And honestly, I'm going to tell you, there's a reason people have been here 5-6 years and say, just trust the process. We're not here handing you charts and saying, study the charts. We're investing in you on a daily. And really, I had everybody commit to waking up today and making their bed. Let's talk about that when it comes to training you and trading. I did. I took a picture. I'll post it in a little bit. Said, if you don't make your bed, get up and make your bed. Any reasons your layouts never save? Your window layouts, we haven't released that feature yet. It's coming out in the next patch. Window layouts. This right here. Will pop out new instances, right? The next patch is coming out with the save layout. So we just haven't made it yet, bartending. Remember, we're still building out the features. So stay tuned to the announcements and things that we're making. We'll make sure we keep you in the loop. Thanks. It's a lot to unwrap, and the Zoom calls are not mentioned in start here. Oh, good call. Let me make sure I put it in there. Oh, okay. So let me make this my task today. This is our old program that we had blended with the new stuff. So we have the old program before we merged with another community. As the new community is merging, we're started building this as we go. So that's a great. Let me make sure to let everybody know, and I'll put it right here. Notes. Thank you for letting me know. Notes. We, as of 2/13, we are refilming all the courses and replacing follow along and start from number 1. Thank you for letting me know that. You're correct. That is not intuitive. My bad. Zoom calls. But to get ahead, you are welcome to follow the below curriculum from the old program pre-213. That's great. I appreciate. That's what I like. If y'all see something that doesn't jive or that I forgot about, please let me know. Good call. Good call. Yeah. No, it's like we merged 500 new faces on top of the merger, right? Like just shuffling things around and filming the program. So Zoom calls will be where they are. They're being organized just like this. Day 1, and these are the longer raw videos. And then maybe on the weekends, I'm gonna come through and edit them to make the shorter versions. So we're gonna split it up into 2 pieces, like application, like I'll have a 5 to 10 minute application, and then the hour-long deep dive. A deep dive is a conversation designed to train you in trading, things like that. So what a cool example today. I like today. So today will be a great lesson. I want everybody to do me a favor. I'm going to call it a day, right? This is not a losing day again. I got some weird irrational signals. Didn't like what I saw. Random on QQQ. I got in the long, scared myself out, closed it out before it went red. Market's just chopping around, and hey, there you go. Sometimes the market just tosses you a weird set of cards. Even though I had a good hand, I still folded. And that's what risk management's about. How did I know to fold when things are looking great? That's what we'll talk about today. Today was a very interesting use of DD versus the irrational signal on a monthly hedge fisher break. We'll talk about that. Some other cool things as we go today in today's lessons. We're going to cover liquidity pockets and a small portion of liquidity maps. So come to today's session. You won't regret it, I promise. And come to that extended trial. The link to that is going to be provided in Discord. If you need to come to the Discord, the link is also below in the description. Love you guys. Thanks for tuning in. Day 15. No losing days yet. Up almost 40% in the account on the small account challenge. Thanks for tuning in, and we love you guys. We'll see y'all in about an hour and a half for the training.